Hello. Johnson Matthey today announced its half-year results for the 6 months ended 30th of September 2016, and I'm here with Robert MacLeod, Chief Executive, to ask him a few questions. Robert, to start with, can you tell us a little bit about the performance of Johnson Matthey in the first half?
Sally, I'm pleased with the performance in the first half. We're issuing results which are in line with our expectations, and most importantly, our guidance for the full year hasn't changed. It's the same as it was before. So our sales in the first half of the year and operating profit were up by 5%, and our earnings per share are up by 12%, and we're benefiting, of course, partly by currency, which has helped us too. One other thing I want to mention is our health and safety statistics have improved, which is, of course, a key focus for us as well. And demonstrating all the confidence across the group, the board has raised the dividend by 5%, which shows you how pleased we are with the performance.
And I see that emission control technologies, first half performance in Europe particularly strong. What's been going on there?
Yeah, Europe we've done particularly well, and we've strongly outperformed the market, both in the light duty side and also in the heavy duty side too. And what we're seeing is OEMs, that's the car companies, moving towards more high-tech solutions to improve air quality. Of course, it's very topical at the moment, lots and lots of discussion about improving air quality. And so we're part of the solution, and they're starting to move as they move their focus increasingly to tighten up emissions, we're part of the solution with our products that we make. But interesting you mentioned you asked a question about Europe, but of course China is another interesting place too, and India, where they're talking about moving further faster, which of course would be good for our business too.
And thinking more broadly about the group as a whole and looking forward to the second half and the outlook, how do you see the second half panning out?
Well, if I look at the group first, as I've already said, our guidance hasn't changed, and our guidance is to be slightly ahead of last year on a constant currency and continuing basis, so excluding the fact that last year we sold a business. So that's on a constant currency basis, but we will benefit quite significantly from the weaker pound throughout this year. So that benefits our results by about £65 million for the group as a whole. So for the reported numbers will be quite good this year, I expect. Looking at the businesses, we've said already they're heavily weighted towards the second half, but particularly true in fine chemicals. But if I go through each division, ECT, emission control, will be continually good. We expect that performance to continue into the second half. Class 8 trucks, North America, probably a little bit weak, but we'll continue to see strength elsewhere, which will offset that weakness in North America. Process technologies continues to be challenging. I don't expect any recovery anytime soon, but it doesn't feel like it's going to get much worse either. And we've got a strong order book, which will give us that benefit into the second half. Precious metal products, pretty steady, performing quite well. Fine chemicals will be comfortably ahead in the second half, driven by product mix, timing of orders, which we can see quite clearly, and new businesses continues to make good progress. And also just today we announced that we're going to invest more in our new battery materials facility to expand that too. So a lot of investment going on, but I think the outlook generally will be in line with what we said just 6 months ago.
And just on the topic of investment, can you tell us a little bit about the plans, investment plans over the medium term?
Yeah, obviously, absolutely. Investment is important, and the biggest and most important investment is in R&D. And we continue to invest significantly there, around about 5% of sales, and I expect that to continue into the medium term, and we will carry on at that level. On the capital side, we are investing more in ECT to meet light duty and heavy duty legislation, so we invest ahead of time to meet that legislation, and that's ongoing at the moment. And also we continue to invest quite a lot in our fine chemicals business to develop a broader portfolio of APIs. So those would be the two areas I'd call out as the biggest investment areas, other than, of course, the battery materials plant I've already talked about.
And so some final thoughts on this half, the outlook for the year, and longer term for Johnson Matthey.
Yeah, I would say Johnson Matthey's in good shape. We continue to invest a lot of money, as I've already mentioned, in capital and facilities, but also in our people and in our products, and that will position us really, really well into the future. And of course, in not too long, on the 1st of January, we'll have our 200th anniversary, and so we're entering the third century in good shape, but very much focused on what we do and what we do well, which is using our science and our science skills and our capability to help make the world a cleaner, healthier place. which is all about what Johnson Matthey does, and it's all about what, frankly, turns on our employees. That's why they like being here, and we are part of the solution to many of the world's problems. So the long-term drivers remain good, but the good news is as well, getting that balance right, the short-term drivers are good too, and we're in good shape.
Robert, thank you very much.
Thank you, Sally.